Well, good day, everybody. Steven Sitkowski here. Welcome to this week's edition of my Market Insights. Happy to have all of you with. Go ahead and share my screen with you. There we go. Hope everybody's had a phenomenal week. It is February the 5th. Quick reminder that everything we do here is for educational purposes only and not intended as investment advice. So let's move in the market. Well, the Fed last week held rates for the fourth consecutive time. Good news. On the other hand, the chance of a rate cut in March about out the window, but I told you that. Now there's about a 50-50 chance it could happen in May. I'm thinking more like June, but we shall see. NVIDIA just keeps a rocking, hit an all-time high. They got a new upgrade from an analyst, pegging their price at $800 a share. 10 years on the rise. I think that has to do with the really strong economic data. And I think maybe a little fallout from Chairman Powell's 60 Minutes interview. I thought that was very fascinating. So that's up to 4.158%. Oil's a little weaker. Last week it was at about 75. Now it's at about $73 a barrel. What to watch this week? Well, we've got the S&P Services PMI. That came out stronger than expected. So that was a nice data point for the economy, not as it relates to the Fed. We've got some Fed speak happening on Tuesday, some more on Wednesday. Consumer credit comes out Wednesday. Thursday, we have the initial jobless claims, as we do every Thursday. Last week came in at 224,000. We're expecting 220. And then the CPI seasonal factor revisions on Friday. All in all, a pretty slow news week. Last week's heat map, Alphabet took it on the chin. I think they are just pretty darn attractive at these prices. And then the usual suspects did well. NVIDIA up another 10%. Amazon had a great week. Meta, 15%. Lilly, 9.5%. The financials are doing a bit better. Here's the 1-year heat map. Check this out. So we've got Meta up 144%, Amazon 50%, the big winner, NVIDIA 216%, Microsoft 53%. Apple's kind of shrunk back down. I mean, not bad at 25%. Broadcom 105%. Berkshire Hathaway B shares up 25%. Energy for the year, last year down. Market breadth. So we like to look at the number of companies hitting new highs versus new lows. On the NYSE, 431 new highs compared to 80 new lows. And then on the NASDAQ, 469 new highs compared to 319 new lows. Both very strong. Percentage of stocks trading above their 200-day moving average has shrunk some. It was above 75%. Now it is at 66%. Little bit of weakening. Big winners last week, Meta up huge. Edwards Sciences. See if there's anybody else. Eaton, HCH Healthcare, all had great weeks. So after their earnings announcement, Meta stock, the market cap, went up $205 billion. The greatest one day market cap increase in the history of the stock market. In November, Apple went up 190 billion. Meta surpassed them. Job growth has been rather robust. It's the one part of the economy the Fed has not been able to break. Jobs are just rocking. Wages are up, but notice hours are down a little bit. So they're paying more, but they're employing people less time. But I'm guessing they want the same amount of work out of them. The economy is the key when it comes to how the market is going to perform. So are we going to get a recession? Probably not. Soft landing? Probably so. When we get a recession, on average, the market is down 6%. We get a soft landing, the market is up on average 31%. I think this is going to be a very good year in the market. Fed probabilities have definitely shifted. So it wasn't long ago when there was about a 90% probability that in May, we're going to get a rate cut. Now that's down to about 54%. And then it gets real strong by June. But this has changed a great deal. So I'll keep updating you every week when you tune in. Oh, we got a lot of earnings coming out this week. Before the bell today, we had McDonald's, and their shares are now sliding. We got Lilly coming out on Tuesday. Wednesday, we have Uber that'll be announcing. So we've got pretty significant players basically every day of the week. So you're going to want to pay attention to these earnings. Earnings are the mother's milk of the stock market. The 1-year returns now, sector by sector. Technology is still the big leader at 42, communications at 40, then a pretty big drop off. Discretionary is now under 20%. Industrials, 12%. Healthcare, financials, 7 and 6 respectively. Staples, not doing a whole bunch. Materials, energy, REITs, and utilities are all down for the last year. So let's take a look at the charts. See what's going on there. Hope all of you had a splendid week. So it hasn't been a great day today, but here's what we look like. This is a 6-month chart on the S&P 500. So gotta love the slope of that 50-day moving average. The fact that the S&P has consistently stayed above that moving average since November. Definitely bullish. Let's see what a daily look like. So we got down quite a bit, came up, fell, came up, and we were moving down into the close just a tad, but nothing very remarkable there. What about the Qs? This is big tech. Yep. Very strong. And how about the Russell 2000? Well, all of a sudden it's stuck on me. Here, hang on. Try this again. There we go. So this has definitely lagged, has it not? When you compare it to, for example, the Qs, look at the difference. And here's the Russell. So the real question is, will this 50-day moving average hold? Can we get some kind of bounce? We shall see. All right. Thanks for watching. Once again, I'll be back with you next week. And until then, have a blessed week.